Approved. Everyone wants to hear that word, whether it's seeking it from our spouse or our friends. We want approval. Well, in a loan approval, that's important too. On this episode of Unpacking Mortgage, we'll talk about the important factors of how you get loan approval. So I've been asked before, what's the big difference between getting an approval and not getting an approval for a mortgage loan? So there's several key factors. Now there's a lot of other things that go into it, but kind of the main things that jump out to me are some of the following. So your credit situation, whether it be derogatory marks, late payments or mortgage lates on your credit, that could really disrupt the situation. So your credit is crucial and vital for a loan approval. You want to make sure your score is decent so you get the best interest rate. Luckily, I can run your credit and give you suggestions to improve it. We have some software we use that kind of gives some cool suggestions and allows us to do something called a rapid rescore. So credit's important. Lates are important. Paying things on time obviously is important, and that's all going to be reflected in that credit report. Your employment history is important. So jumping around on a bunch of different jobs sometimes can be an issue for certain loans. If you want the easiest approval, it's being at a job for an extended period of time. We typically look at the last 2 years of your employment. If you're self-employed, that's also important. Because once you've started a job as a self-employed person, we really need about 2 years on that job on your taxes to evaluate your income properly. Your income structure is very important. We kind of talked about self-employed. That's a whole nother realm of employment, income employment. But another thing is just your pay structure. So I might be currently salaried, and then now I move to a position in the last 6 months where I'm salary plus commission. Well, if we haven't seen commission for 2 years, we're not going to be able to include that income. So you might have gotten a promotion and making more money, but because your pay structure has changed, that might negatively impact how much you can purchase. Another important factor is your debt to income. We as mortgage bankers will look at how much debt your house is, your new house payment is compared to your total income. That's called the housing ratio, the front end ratio. Then we'll also look at all your debt, your new housing payment plus all your other current liabilities. And that can include things not only on your credit report like credit cards and car payments, but it also can include things like child support that you're paying outside of a credit report. So we'll look at all that plus your new house payment, and we'll determine an overall debt to income. So that's another key factor on whether a loan is a go or a no-go. Another important factor is loan to value. So that determines, whether mortgage insurance is applied, whether other circumstances are applied. The more you have down, the lower that loan to value is, the less risk there is to the bank. So that can be an important factor in whether you get approval or not, depending on your situation. Your assets are a key component. So we're going to look at the money that's coming into the transaction to purchase a home. And we're going to look at how long it's been sitting there. Where did it come from? If you're bringing $20,000 to closing and all of a sudden in your last month bank statement there was a $15,000 deposit, we're most likely going to ask where that came from and have to document that. So knowing where your funds are coming from, how long they've been in your bank are important factors, and something, if you've made a large deposit, you want to make sure your mortgage banker is aware of that. The condition of the property you're purchasing is also a key factor. So if you go out to look for a home and you're standing inside and can see the outside, the sunlight's pouring in, that's probably an issue. You're going to want to talk to your realtor and your mortgage banker and make sure they know that, hey, there's a big issue with this property conditions. We want to make sure the home is safe. That's going to be a key factor for all loan types. Some loan types are a little more loose on their restrictions on defects in the home, but if there's any issue with safety, that's always going to be a problem. So if you see something in a home you're looking at buying that is of concern, let us know. We'll be able to tell you if that's an issue or not for your particular loan type. So we've talked about a lot of different issues that can take a loan from a yay or a nay. The main thing is to be completely open and honest and transparent with me, your mortgage banker, in the process. Don't try to hide things. Make sure we're informed of everything that's going on. If there was large deposits, if there was a ding on your credit, if there was a foreclosure in your past, just make sure you tell us everything. We're advocates for you. We're here to make sure your loan closes. Heck, that's how we get paid. We want your loan to close. So make sure you tell us everything. Consider us almost an attorney that you're divulging all your information. We want to make sure we know everything, because if we don't, and it's kind of hidden in the background, it always tends to come up and cause an issue. So let us know everything on the front end. Well, thank you for watching today. Check out our other videos. There might be some topics you want to either get a refresher on, or maybe it's a topic you don't know anything about. If there's something you want us to cover and we haven't covered it yet, leave a comment below and we'll get to that. Again, thank you for watching and have a great day.